Hello investors, welcome back to the channel. Today we're going to be discussing my two portfolios and pretty much comparing them to see which one I believe is doing better and which one I think is going to be better in the long run. And then you guys can leave comments below telling me which one you guys like better, and if you guys had to pick, which one would you actually invest in. So first off, we're going to be discussing the M1 Finance Dividend Portfolio. So pretty much these are all dividend stocks. These are stocks that are going to be paying me either monthly or quarterly, and I'm getting dividends, a certain amount of dividends every month or every quarter. So we had about $5,000 invested in this portfolio. We are currently up 7.07%, which is about $352 profit. This portfolio is only about 3 or 4 months old, so it's actually newer than my Robinhood one. But I have everything pretty much set up in like different sectors, so we're just gonna go open them up and go over them. The first thing in the real estate one I have is Store Capital. We are up about $39.65, which is 8.88% right there. We have Realty Income O. We're up over $17 on that position, which is about 5.66%. We have Welltower up over $21, 8.74%. Next up, in the next sector, which is the consumer, we have Coca-Cola. Coca-Cola is doing amazing. We're up about 7.18% on this position. We have Walmart. Walmart is another one I picked up. We're up about 11.15%. Next up, we have PepsiCo right there. We're up about 3.13% on that position. And then Amazon. Amazon is not a dividend stock, but I can own fractions of it, and that's why I bought it in this portfolio. But we're up about 3.5% on Amazon as well. We have bonds and ETFs. So SPHD, obviously, many people have this in their portfolio. We're up about 4.7% on that position. VNQ, which is like a real estate ETF, and that we're up about 6.4% on that position. We have LQD, and we're up almost 6%. Now this is all bonds, so that's kind of like a dangerous investment in my opinion. Not many people are into bonds, especially currently, but I'm still up about 6% on that. We have telecommunications right here, and in Comcast I'm up about 11% almost. Verizon I'm up about 6%. AT&T has really done me well. I just wish I had more shares. I'm up about 20% on that position right there, which is amazing. We have our utilities, so we have SO, which is Southern Company. Southern Company, we're up about 12.28%. Dominion Energy, we're up about 7% on that position. And then we have Duke Energy, we're up about 10% on that position. In our finance sector, we actually created a new position in here. First off, we have JP Morgan Chase, which we're up about 8.7%. Next up, this is one I'm going to be adding on. So any like referral money on dividend money that I'm receiving right now, I'm going to be pushing towards this, which is Bank of America. Bank of America is at a pretty good price right now. I mean, it's actually up there, but I'm hoping it dips a little bit in the upcoming months so I can keep adding to the position. Currently, I'm down 1%, but I just got in it. But I'm hoping that we can get this down, the average price down to maybe about $27. We're hoping for a dip soon, but I'm going to be adding to that position. Tech sector, we have Microsoft. This stock I consider a growth stock, really not a dividend stock, but I do have it in this portfolio. We're up about 11% on Microsoft. And then last but not least, in the M1 Finance portfolio, we have J&J, Johnson & Johnson. We're currently down about 3% on that position, and then we have Pfizer, which we're down almost 14% on that position. So out of all my sectors, all of them are doing pretty good. They're all up about 5 to 10%, even 11% right there. But our health sector is the one that's doing the worst. And now this is one of the main reasons that I invest into dividend stocks, because no matter what happens with all these, I'm receiving dividends. This is still paying me dividends. Like Johnson & Johnson is still giving me dividends every quarter, every quarter I receive dividends from them just for owning the stock. It doesn't matter if the stock is up, if the stock is down, I will still receive that dividend, so it doesn't really affect me as much. And all these other stocks are also giving me that dividend, so that's why I really enjoy investing in them, because it doesn't really matter where the stock is at right now. You're thinking long term, 10 years in the future, and the only reason you would ever really sell one of your stocks is if they cut their dividend and they weren't able to pay out that dividend anymore, or something happened with the company that's really like affecting it in a bad way, and you don't think that it's going to be good in the upcoming years. and that's why I own all of these stocks, and they're all doing very well for me. So now we're going to jump into my Robinhood portfolio, and let's see how well we're doing with that portfolio. All right, so this is the Robinhood portfolio. Now, this portfolio is going to be just growth stocks that I'm hoping that, these are stocks that I'm holding and hoping for the long term that I will be making a lot of money on growth. Now, as you can see, we're down for the day, and then if you put on the week, we're down for the week as well, and then in the month, we're down about 300, and then the 3 months, we're down about 300 and something, and then for the year, we're actually up almost $80. But if you look at this right here, July, so the end of July, we were up about $600 on this portfolio. Now, I have made a few mistakes and traded options, and I've probably lost about $300 in options, but still that portfolio should have still been up about 300 because I did trade Enphase Energy, and Enphase Energy did make me about 200 and something dollars profit, but I sold out once it dipped. Now, first off, you guys all know I have this contract, Disney contract options. It is for January 17th, 2020. We needed the stock to hit 180. At this point, it does not look like Disney will be hitting 180, but we'll see what happens. So on this position, we're actually down $118, which is 86% negative. So this is terrible. The stock needs to go up about $50 by January. I don't know if that's gonna, if that's gonna happen. Next up in the portfolio, we have Microsoft. Microsoft, amazing company. It just hit all-time highs this week right here. Microsoft actually did a buyback of their stocks, and the stock rocketed as it went from 136 to about 142 right there. It hit an all-time high. The high was 142 and 37 cents. Market cap obviously is it's the #1 company in the world. So we have 13 shares, and on this position, we're up about $160, which is actually more than our portfolio is showing in the profit once again, because like I said, I've lost money on options and other things. So we're up $160, even though our portfolio is only saying we're up about, $80 for the year. Now, Disney has been very, very bad these past few weeks. One analyst actually, cut their prediction price for Disney, and the stock just took a huge dip. Like, it was at 137 right there. Now the stock is trading at 132. If you look at the 1 month, we're down about 3%. If you look at the 3 months, we're down almost 6%. Ever since it hit that high up there of 140, 145 right there, maybe 147 actually, I believe it was. Yeah, 147. It's just been on a downhill. Now I'm kind of seeing like a head and shoulders right here, so I'm not sure what's going to happen right now actually. If we break this support, this could go back down. We don't really know how far it can go, but it could go down a lot. So I'm hoping that some positive news happens and we can start spiking back up. But this position, I was up about probably like $200 or $300, and as you can see right now, our total return is only $4 on Disney. So we lost all of our profits pretty much. Next up, we have AMD. AMD, obviously long term, they have very, very good chips. We have 10 shares. We're up about $15. It was at an all-time high of $35.55, but once again, a lot of China trade wars going on, and the price just keeps going back up and down. So we're kind of just consolidating right now. Next up, we have McDonald's. Now, McDonald's also had some very, very bad stuff going on in the past week or month. In the past month, it was all the way up at the all-time high of about 221. And then we took a dip back down to about 208, and now we're trying to figure out a support here and bring that stock back up. So we have 6 shares. We actually bought more, so our average cost was actually a lot less, but recently we added more to the position, so now our average cost is $210, so we're actually down to $6 in this position. And then we have Waste Management. I like this company a lot, even though this took a dip exactly when McDonald's took a dip as well. It was at all-time highs of about 121, and then it took a dip down, and now, we went all the way down to about 111, 112. We're kind of consolidating and taking a turn back up. We have about 5 shares at average cost of 112, so up about $16 in that position. And then GE is just a stock that I received for free. So if you're looking at my portfolios and thinking, oh, growth stocks versus dividend stocks, in my opinion, we all know the answer. And that answer as of right now is dividend stocks. I definitely enjoy my dividend stocks a lot more because I'm guaranteed pretty much a certain amount, a certain percentage of what I invest every year, every quarter, every month. Whatever happens, I'm always going to get that dividend. So I believe this portfolio that I have is an average of about like 3.5 to 4% dividends. So I receive close to $200 every year in dividends, no matter what. And this portfolio is only about 3 or 4 months old, and my Robinhood portfolio is probably 6 or 7 months old. So the dividend portfolio has been doing a lot better for me. It has about 5,000 invested. My other portfolio has about $6,500 invested, and this portfolio is killing it. It's up over 6%, so or actually 7% compared to the other portfolio, which is barely at a percent, profit. So in my opinion, right now, dividend investing is something that I really enjoy, and I'm going to continue to add more money to this portfolio and keep adding to my positions. So in my opinion, dividends are winning right now. What do you guys think? Leave a comment below. Which one of the portfolios would you invest in if you were investing? Would you invest into dividends or into my growth stocks? And what do you think? I know Disney is doing very bad right now, but it was doing really well, and I'm thinking it's going to come back up. November, Disney Plus is coming out. A lot of numbers are going to be coming out, so I'm having high hopes, and that's something you got to think about as well. So leave a comment below. Make sure you smash that like button. Don't forget to subscribe to the channel, because I will be making more videos, and I will actually go into depth and make a video about dividend stocks versus growth stocks in general and tell you the benefits and the ups and downs of it. So I'll see you guys next time.